JSE slightly muted with global peers mixed as dovish comments from a Federal Reserve official raised hope that the central bank may not need to raise interest rates any further. Gary Booysen is the portfolio manager at Rand Swiss, and he joins us now to take a look at the market moves. Gary, the Rand is upbeat this afternoon. What's driving sentiment?
I think a little bit of it is the US dollar weakness that we're seeing coming through. And this is really as market participants believe that we will see interest rates coming down towards the middle of next year. If I look at the probabilities currently, we're looking at over a 90% chance that we'll see a rate cut from the US before the second quarter of 2024. And obviously with cheaper money, that's going to make a big difference to economic performance. So as a result, we've seen bond yields starting to fall. We've seen equity markets rallying aggressively in November. And generally, people taking a little bit more optimistic tone on I suppose, future economic data prints.
Let's take a look at South Africa's private sector. Its credit grew by 3.94% year-on-year in October, while annual growth in M3 moderated to 6.1% in October. Help us make sense of the data.
Yeah, so if you have a look at it, it was a long way below expectations. So if you look at the Bloomberg consensus, we're looking for about 4.3% growth. Now, around half of the private sector credit extension number comes from corporate credit, and that on a month-on-month basis actually fell more, at least 1.8%. So part of this is just due to a lack of business confidence within the South African economy. We understand the issues that we're facing around load shedding and higher interest rates and essentially the lower viability of so many projects. I suppose the one bright spot in the number was, in fact, mortgage advances to corporates, which was fairly decent. But overall, I think we're just subdued. It's been a very difficult year for a lot of people, and obviously borrowing less and looking at less economic activity.
Purple Group has posted a trading statement for the year ended 31 August 2023. Talk us through the performance.
So not a lot of data within the trading statement. So it looks like the group is going to swing to a headline loss per share. So in the previous period, they made 1.12 cents per share. And the guidance that they've just released today is that they will make a loss of between 1.94 cents per share and 2.15 cents per share. So it's somewhere around 2 cents per share. The stock is not reacting well to the news. So the stock's down around 8% on the back of this, taking the stock down to around 58 cents currently. And yeah, as I said, not a lot of data, but you can understand the business, obviously, the flagship product is their Easy Equities offering. They've pushed through that new Thrive fee, so they are looking at trying to generate more revenue off their client base. And it's a difficult market that they're operating in. I think, the consumers are under pinch. They primarily operate in the retail segment. And as they've seen maybe withdrawals, you can understand why the margins are under a little bit of pressure. So, let's see what happens when the actual results come out.
Let's take a look at Exxaro Resources. They plan to sell their Ferry Layers unit by the end of June 2024. What do we know about the potential sale?
So essentially what they're selling is, a business that creates ferrosilicon as part of their ferroalloys business. And this is one of the inputs into steel making. And essentially it doesn't fit within the strategic direction of the company. They're looking more towards battery technology, and they are looking to sell off the unit. We obviously had the announcement from ArcelorMittal yesterday, South Africa's biggest steel manufacturer, that it would be laying off around 3,500 staff and really downsizing operations. So you can understand why they would like this out of their portfolio. And it does look like they have a buyer for the assets. It looks like a good move. That expected to be completed middle of next year.
Grindrod Shipping's results for the 3 months and 9 months ending in September out. What stood out for you?
Also, another company making a loss, and just really highlighting how difficult the environment is. Posting a loss per share of around 33 US cents, but still decent revenue numbers. So the revenue up around $112.5 million for the quarter. Also posting a loss over the 9-month period. They're actually simplifying their reporting structure, going from a quarterly reporting structure to a semi-annual reporting structure, which will make things a little bit more simple to report report on, as you're not going to have these dual reports. But looking at the commentary, the group is reducing debt, very, very aggressively. So, just this year they've managed to pay down $36.1 million in bank debt, and that's essentially saving them around $1.9 million, in interest payments. So paying down debt aggressively, and I think a good period for the shipper. But yeah, you need economic activity, very linked to global economic activity, and that's a little bit subdued currently with a higher interest rate environment.
Rand Swiss, but for your manager, Gary Booysen, thank you very much for your time this afternoon.